Here is an example on recording goodwill and what happens if there's a subsequent impairment. Now remember, you can only purchase goodwill. Any goodwill you generate internally cannot be recorded on your statement of financial position. So let's assume that a company is buying another company. And these values here are actually the net book value to the company doing the selling. So the net assets are $373,000. But we're not going to worry about what they are to the seller. We're only going to worry about what it is that we are buying. So let's say that the value of inventory really isn't $130,000. The fair value to inventory is $140,000. The fair value of the land is $75,000, and the fair value of the patent is actually $18,000. All the other numbers are pretty equal, and if you think about it, they kind of make sense. Cash and accounts receivable, their fair value should be pretty close to book value. Equipment may or may not be equal to its fair value. That's got to do a lot with depreciation and things like that, and the same for building. But accounts payable pretty much is equal to its book value, and fair value are pretty much equal as well. So what I've done is I've replaced those items with the fair value because this is the amount of net assets that we're going to be purchasing. So instead of purchasing $373,000, we're actually investing in a fair value of $413,000. Now, that's fine. But what are we going to pay for it? Well, if we're paying $450,000, then the difference is actually going to be $37,000. We're paying $37,000 more than the value of the assets we're buying. So of our purchase price, we're paying fair value for each of the things we're purchasing, but we're also paying extra for goodwill. Now remember, you can't just take the original net assets to the selling company of $373 and say that the difference between that and our purchase price is goodwill, because that's not really what we're purchasing. We're purchasing inventory worth $140,000, no matter what it was on the company's books. So we've got to reevaluate this at fair value, then subtract our sales price or our purchase price to get our amount of goodwill. We're going to make our entry based on what we paid for. We paid for inventory worth $140, land at $75, and patent at $18, even though that's not what they were on the seller's books. The seller will pick up the gain, and we're not going to worry about it. We paid for the fair value of those items. So we're going to debit cash, accounts receivable, inventory, land, equipment, building, and patent for the fair value. The difference between the net assets on their fair value and what we paid is the $37,000 we have in goodwill. So we're going to go ahead and debit goodwill. We can record goodwill because we purchased it. We cannot record goodwill that we generate internally, so now we have goodwill on our books. We can't amortize it because it should have an indefinite life. The goodwill we created or we purchased, we should be able to continue, and that should continue to bring us good customers, so we don't really have to worry about it. We're going to credit the $220 that we paid for the payables, or that, was kind of credited in our amount, in our net assets that we purchased. And for this example, I just said, well, what if we paid $275 in cash and a no payable of $175? It doesn't really matter. You're going to credit however you purchase those assets. And that's how you record goodwill. Now, I mentioned earlier, we do not amortize goodwill, and we hope that we get to continue generating goodwill and that we continue to have customers because of the goodwill. But what if it doesn't? Let's say things changed. We still have it on our books at $37,000. But we do annual analysis and we figure out that our value of the goodwill is really only $25,000. We also know that somebody's come in and maybe they're making a bid and they would buy our business at $420,000, and the fair value of our net assets, excluding goodwill, is $400,000. So that's going to tell me that the fair value of my goodwill is $20,000. So we've got to go do our impairment test. Now remember, we've got the higher of, and we're going to do this comparison, etc., that I'm going to show you. So the numbers we need to remember are the carrying value is 37, the value in use is 25,000, and the fair value, if we were to sell it, is 20,000. So here's our comparison. Our carrying value is 37,000, and we're going to do that versus the higher of the cost to sell. Well, if we were to sell at 420 minus the 400,000 net assets, etc., let's just assume any cost to sell are already included there, but the fair value of goodwill is 20,000, but our value in use is 25,000. The higher of these two is 25,000. The impairment is the difference between these two, and we find that goodwill is impaired by $12,000. The entry to record that is a debit to loss on impairment. It's going to go in the other gains and losses section, and a credit right to goodwill because we are going to reduce the value of the asset by $12,000. Unlike some of the other intangibles, if the value of goodwill goes back up, we do not have recovery of a loss on impairment. Once goodwill is decreased, it stays decreased. And the way to remember that is we cannot record goodwill we generate internally. So if goodwill goes back up, it's probably because we generated it internally. There's a chance it could be other issues, but we still cannot record any goodwill that we have generated while we have had the business. So we do not record any recovery of a loss on impairment. And that's how to record goodwill, measure impairment, and record any loss.